So good morning, everybody. I would like to say welcome to our webcast, Future of Ukraine, Doing Business in Ukraine from a Tax and Legal Perspective. That is, from my perspective, a topic of my heart. Besides all the technical discussion we are running in the moment in Germany at a global level, because Ukraine, the country Ukraine needs our help. Yeah, as you know, we have a number of military, political disruptions in the moment. In addition, I think also from a seasonal perspective, Ukraine needs our help. What we would like to discuss today is, besides the need of investments in Ukraine, how you can organize investments in Ukraine, how you can organize running business in Ukraine from a tax and legal perspective. We have a very extensive agenda of today. After some organizational aspects, I would like to hand over to Andrew, but let me make some organizational comments. First of all, I think the webcast will be recorded. Secondly, if you have any comments, if you have any questions, feel free to use the chat, to use also the Q&A button. And if necessary, you can also test if your mics are working. Feel free also to interrupt us, because from our perspective, it's of importance, to have also an interactive session together with you. Last point, after the webcast, we will do a follow-up emailing. That means we will also share the presentation to you after this webcast very shortly. So first of all, I wish you really an interesting session, and now I would like to hand over to Andre, who will introduce the agenda.
Thank you very much, Jobst. Good morning and warmest welcome to everyone here. I am delighted to have all of you joining our webinar today on this very hot topic. Despite the ongoing challenges which resulted from the Russian invasion of Ukraine, our local economy remains resilient and quite promising, and the market presents many opportunities for businesses looking to invest and expand. And given the current dynamics and growing relations between Germany and Ukraine, it is important to get better understanding of the tax and legal framework in Ukraine. So today we have the opportunity to get valuable insights from our leading experts. So I will present to you the agenda of our today's webcast. We will start from the general overview of the Ukrainian economy by Vasyl Drobot, our director and leader of corporate tax practice. Then go into transfer pricing matters together with Alexander Yampolsky, the leader of transfer pricing in Ukraine. Following this, Natalia Rudenko, our senior manager from international tax team, will talk about deemed dividends on transfer pricing adjustments. And then the legal team, represented by Victoria Sidorenko, senior manager, and the topic will be foreign currency transfers. Then back to Vasyl, who will present some insights about the regime of authorized economic operator in Ukraine. And his colleague, Andriy Zhuravel, manager from corporate tax, will talk about Standard Audit File, SAF-T in Ukraine. After that, Roman Makarchuk, our senior manager from legal, will explain something about electronic document management in Ukraine. And then we will again welcome Jobst Wilmans to speak about German and EU investment programs, and there will be also short Q&A sessions. Before we start with this extensive agenda, I will just would like to say a couple of words about our practice in Ukraine, what is going on now. So next slide, please, if possible. Yes. Deloitte Ukraine, we are here at the market for more than 30 years, and currently we have more than 500 employees based in Kiev. And we are proud to say that despite the war, our Kiev office is open and we can work from the office. And we are also proud to say that even during these difficult times, our team is doing a great job for the clients, and we received lots of awards and recognitions during the last 3 years. All of them are here mentioned on the screen. We are proud to say that we have a gratitude from the President of Ukraine for supporting the country during the war, that we were included in various global ratings by Forbes, by Financial Times, and also the latest ones and very important ones are recognition of Deloitte Ukraine by the International Tax Review as Ukraine Tax Advisory Firm of the Year 2024. And we also were recognized with top-tier rankings in the ITR World Tax and World Transfer Pricing Guides. And we are happy that we, despite the war, we have a strong team in Ukraine. And today our team is at your disposal to share insights about the Ukrainian tax and legal framework. So wish you have a good time with us during this webcast, and transferring the microphone to the next speaker.
Hello everyone. Thank you for joining in on our webcast. So my name is Vasil, and as the colleagues already introduced me, I'm a tax director here in Kyiv office of Deloitte. I'm primarily a tax advisor. However, I also involved in a lot of M&A projects, and I also consult a lot of our clients about general investment opportunities in Ukraine. So I would like to give you an overview of the current wartime Ukrainian economy, and so to speak, give you a view from the ground, what is happening here and how it looks working in Ukraine in 2024 as a business advisor, which sees a lot of businesses and their conditions right now. So to give you a little bit of an overall and historic perspective, so Ukraine is the largest country fully situated in Europe. Despite that, the Ukrainian economy historically was rather modest. The most prominent year in terms of overall GDP achieved by Ukraine was the pre-war year, 2021. Despite that, despite the war, despite the current ongoing hostilities, Ukrainian economy generally remains pretty stable, largely due to the huge inflow of foreign aid. As you can see, over $341 billion was pledged to Ukraine over the last 2.5 years, for what Ukrainian people are extremely grateful. But also the resilience of Ukrainian people to live their day-to-day life and continue normal economic activity also shows. And it shows in the way that Ukraine is able to improve its standing in various international economic and political ratings, and also shows in general macroeconomic stability. So if we can move to the next slide. In 2023, Ukrainian GDP was around $178 billion, which fall of about 20% from the most successful 2021. The initial fall when the invasion started was 29%. So over the last 2.5 years, Ukraine has recovered around 8 to 9% of its pre-war GDP. 18% of the Ukrainian territory, as you may well know, remains occupied by Russia. And the front lines and the active fighting is all focused on east and south of the country. The central Ukraine, Kyiv, and the western Ukraine remains relatively calm, considering all the conditions. Of course, there is air alert, there is occasional bombardment, but generally speaking, in central and western part, and again in big cities like Kyiv, Lviv, Dnipro, Odessa, people mostly go about their day-to-day life, and there is a lot of traffic, the restaurants are packed, and generally speaking, like almost 100% of our clients that we worked pre-war, they continue their operation in Ukraine, and they continue doing business, and most of them are even in a profitable position. And the most frequent question which we receive from our clients is how to repatriate the profit from Ukraine, which is a little bit difficult due to currency control restrictions, which we will hear about soon from my colleague Victoria. But returning back to the economy, I think the great achievement of Ukrainian central bank, which remains rather independent institution, is the fact that the inflation was reined in check, and despite the ongoing war, the inflation in Ukraine remains, I would say, not low, but at least manageable. We will see on the next slide the inflation level. And again, as I said, Ukraine was able to achieve a real growth of GDP. Again, not an easy thing to do during the war. And to be honest, it was in a big part, again, propelled by the international aid for Ukraine, because this international aid then getting spent on various support programs for internally displaced people, for businesses which suffer due to the war, which then translate into money paid to employees, which also helps to increase and sustain consumer demand. Also, of course, Ukrainian government spends almost 50% of its revenue on the war, on the salaries to the fighting personnel, on the military-related expenditures, and all this money also gets pumped into economy, which sustains consumer demand, which allows businesses to earn profits, and ultimately results in modest but GDP growth despite all the challenges that Ukrainian businesses face. And as you can see, inflation was indeed I would say controlled. So it was very high in 2022, but it dropped down significantly in 2023, rose in 2024, and all things going more or less steady as they're going now. It is expected that it will remain manageable over 2025 and 2026. Also, the purchasing management index also remained steady and even been increasing over 2023 and 2024. And overall business activity, considering the challenges that Ukrainian faces, I'm sorry, such as ongoing blackouts and bombardments, I would say it's pretty remarkable that Ukrainian businesses are managing to continue their operations, even increase operations in a lot of cases. And also, I don't want to sound very rosy and optimistic. Of course, we expect a lot of challenges this winter, again, due to electricity shortages and poor state of the Ukrainian electricity grid. This could not be discounted, and it produces very substantial negative effect both on consumer activity and business activity. But even despite that, generally speaking, both international institutions like the World Bank and IMF and Ukrainian bank still expect GDP growth. So as long as there is influx of foreign aid to balance out the budget, I think that Ukrainian economy could be going with pretty stable indicators of inflation and some modest GDP growth. And of course, like from the consultant level, from the level of the person who interacts with Ukrainian businesses a lot, all have cautiously optimistic expectations in terms of profits and revenue growth. Could we move to the next slide, please? If moving away from the current economic and war context, it's very important to note that Ukraine overall is a very competitive country and very competitive as an investment destination, especially in the context of its geographic location, future potential membership in the European Union, and very skilled population, very skilled workforce that does not require very high levels of pay. So, the Ukraine competitive advantages, as we see it, are primarily its geographic location and the ability to produce goods and services cheaper than the European Union, but the potential easy possibility to export these goods and services to the European Union very quickly and very efficiently. Of course, this also was a little bit impaired by the war because, well, a little bit, much impaired by the war because Ukrainian trade used to rely a lot on sea routes, which is currently restricted. Also, I need to note that some goods are still being pushed through the Ukrainian seaports, like grain and some steel exports, but mostly the export routes that they use now is railways to Europe and roads to Europe, and the network respective infrastructure has been expanding, and a lot of Ukrainian businesses were quick to adapt and to change their logistic supply chains to accommodate the fact that the sea routes are no longer available and most of the Asian routes are not available as well. And the next slide, please. So the last, I would like to highlight the industries that we as Deloitte Ukraine see as the most hot and the most prominent and that could offer the most proceeds and the most profits going forward if you be brave enough to invest in the Ukraine during the war, or if you want to be this part of historic reconstruction of Ukraine and this success story of bringing Ukraine back to the prominent place as an economic power in Europe and the world. So the industry which obviously comes to mind is military and defense. It has been developing very quickly right now in Ukraine. So for example, the production of drones, it rose almost 10 times during the late 2023 and beginning of 2024. There is a lot of military plants being built right now. The Rheinmetall is talking about opening second plant in Ukraine. And overall, it is expected that even if there is some settlement or even the pause in fighting, Ukraine would still heavily invest in military and defense. And moreover, Ukrainian military and defense company are trying some cutting-edge technologies right now, especially in terms of robotics and drone production. The other industry which Ukraine has been historically very proud of and very successful is an IT industry. Ukraine has a vibrant startup community and it has a lot of outsourcing companies, which are now some of the most profitable and big companies in Ukraine. The other industry which obviously come to mind in terms of post-war reconstruction is the construction industry itself, and in particular, the building of materials and production of construction materials. A lot of Ukrainian cities has unfortunately suffered quite heavy damage, and the Ukrainian infrastructure has not been very well maintained over this 2.5 years due to lack of financing, and most of the financing being directed towards the war. So there is huge demand for construction in Ukraine, and the demand will only grow if there is a pause in fighting. Of course, everybody heard about the agriculture. Ukraine is one of the world leading exporters of many agricultural goods, and there is a lot of opportunities to be had in making Ukrainian agriculture even more efficient, in demining the agricultural areas, and developing the agricultural potential of Ukraine as a whole. Also, a little bit what I've talked about infrastructure. Ukraine needs further development of infrastructure between it and the European Union, as most of the good flows are now flows directly to the EU countries, and the current railroad network and road network cannot support this volume properly. So there's immediate and big future demand for infrastructure development in that regard. And the last but not the least is energy. Almost 50% of Ukrainian energy production facilities are now damaged or destroyed. The Ukraine almost all the energy Ukraine produce is nuclear or from renewable sources, and there is a great potential for rebuilding these power plants and also investing in new power sources, especially green energy, and also rebuilding and developing Ukrainian energy grid. Thank you. I'm passing the word to the next speaker.
Thanks, Vasil. We see that some of you raised the hands, so potentially there should be some questions from you guys. We'll kindly ask you to use, if you have some questions, please use the button Q&A. It should be on the bottom of your screen. And please write your questions. We will be more than happy to answer of our webcast. Let's move on. And now we would like to discuss a crucial topic that has gained significant importance in recent times: transfer pricing. Transfer pricing focusing on the period starting from 2022 after the full-scale Russian invasion. Thanks. Through analysis of statistical data, we have gained valuable insights into the struggles of large businesses which are operational in Ukraine. I mean, companies with a turnover exceeding 40 million euros. Over half of these companies have experienced decline in revenue. The number of loss-making companies has doubled in the face of these challenging times. This significant increase in loss-making entities highlights the pressure and financial strain experienced by businesses that are operating in Ukraine. Our analysis has revealed that certain industries have been particularly affected by the war. The four industries are the following: Horega, hotel industries, cafe, IT sector, heavy industry, and logistics. These sectors have faced unique challenges, ranging from disrupted supply chain to decreased consumer demands, ultimately impacting their profitability. The decline in revenue, the doubling of loss-making companies, and the challenge faced by the specific industries all contribute to the complexity of transfer pricing analysis in this context. Let's move on. So now let's try to explore the potential strategy and approaches to how to substantiate the market level of the margin generated during the wartime. We will delve into the key factors that have impacted businesses in Ukraine and their profitability. These factors shed light on the challenges faced by the companies operating in this difficult environment. So, first and foremost, supply chain disruption. Supply chain disruption has been a major hurdle for business in Ukraine. The blockades of Ukrainian ports, the limited capacity of land borders for exporting and importing goods, drastically affected the ability of businesses to operate efficiently and maintain their profitability. Another critical factor: loss or damage of assets. Russian missile strikes have unfortunately targeted facilities, leading to the destruction of valuable assets. This loss not only impacts the immediate operation of the business, but also adds to the financial burden of rebuilding and replacing these assets. Furthermore, the war has resulted in decreased demand within the Ukrainian market. Many Ukrainian citizens, as Vasil have mentioned, have migrated to Western countries. This resulted in decline in purchasing power and consumer demand. This decrease in demand has put additional strain on businesses, making it even more challenging to maintain the profitability. The damage to energy grids, which also mentioned by Vasil, has also had significant impact on business in Ukraine. Frequent power outages, disruption have disrupted production process. This lead to delays and increased cost. currency control restrictions also played a role which impacted the Ukrainian profitability, the profitability of the Ukrainian businesses. The introduction of strict currency control has led to the foreign exchange losses for the companies. And lastly, it's very important to highlight that the financial aid that's provided by the companies, by the employer to the employees, to support the employees during the wartime also had the impact on the profitability of the company. Let's move on, please. Let's talk the algorithm that we recommend to apply. We recommend applying to assess the impact of the war on the company's business and determine the appropriate approach for the transfer pricing analysis. So the first question we ask is, did the war impact the company businesses? In very rare cases where the answer is no, indicating minimal or no impact from the war, we can proceed to the next questions. Other transactions are at arm's length. If the transactions are indeed at arm's length, it may be reasonable to apply the approaches used in the previous year. If the transactions are not at arm's length, indicating some kind of deviation from the market conditions, we must conduct a deep analysis to understand the reason behind this deviation. Let's explore the three key options. The three key options when the answer to the first questions. Did the war impact the business in Ukraine? If the answer is yes, so the first option is to revise or to adjust the profitability of the Ukrainian company. This revision is specifically for transfer pricing purposes, taking into consideration the factors we discussed in the previous slide. By revising the profitability, we aim to reflect the impact of the war on the company's financial performance and ensure a fair and accurate assessment of related party transactions. The second option is to introduce changes to the economic analysis. Instead of relying solely on the historical data from the previous year for comparison, we can now consider the reporting period itself. This means that comparing the financial data of the comparables from 2022, let's say, with the operating margin of the entity for 2022. And the third option is to change the transfer pricing analysis approach. For example, if the previous approach was based on the transactional net margin method, so-called TNMM, using net margin as a key indicator, it might be reasonable to switch to the resale price method or another method that better aligns with the current market conditions. There is a limited tax audit practice and information available regarding the how Ukrainian tax authority would approach this year of the war. As you may recall, the OECD released the specific transfer pricing guidelines published back during the COVID outbreak. This guideline provides valuable insights how to approach transfer pricing analysis during times of significant economic disruption. And while the guidelines may not directly address the war times, they provide a general framework for assessing the impact of significant economic disruption and offer guidelines how to ensure fair and accurate transfer pricing analysis in such challenging context. Let's move on, please. And yeah, this is my final slide, and let's discuss the next steps that companies should consider in the preparation of the transfer pricing documentation and analysis of the terms of the related party transactions. So the first, impact of the war on the company's businesses. Please disclose and document the specific impact of the war on the company businesses operations in the transfer pricing documentation. Second, identification of costs and extraordinary expenses and revision of financial results. It means that you should identify and document any additional costs or extraordinary expenses incurred as the results of the war. Revise the company's financial results to reflect the impact of this course to ensure that the transfer pricing analysis accurately reflects the revised financial position. The third one, research on the overall market trends and industry analysis. It means that the company should conduct comprehensive research on the overall market trends and the specific impact of the war on the industry in which the company operates. This analysis should consider the factors such as changes in demand, supply disruption, market dynamics influenced by the war. And last but not least, supplementing the transfer pricing analysis with additional arguments and changes to transfer pricing methods or benchmarking study. It means that the company should enhance the transfer pricing analysis by supplementing it with additional arguments and supporting evidence that justify any changes made to the transfer pricing method or transfer pricing policy. If, despite completing all the steps, it remains challenging to substantiate that the terms of the transactions are at arm's length, it becomes necessary to make transfer pricing adjustments. It's crucial to bear in mind that such adjustments may result in the accrual of deemed dividends. And at this point, I would like to introduce Natasha, who will provide further insights and guidance on the topic of deemed dividends. Natasha, hand over to you.
Yeah, thank you. Good morning, everybody. My name is Natasha Rudenko. I'm busy with international tax issues, and in particular, as regards Germany, we have a very interesting situation because it's quite rare when the country has a regime of constructive or deemed dividends, and both Ukraine and Germany have. So we need to give you some practical advice how to deal with some, unfortunately, unpleasant tax burden that may appear, and we will provide you an example if you supply something from Germany to Ukraine, how to deal with it and how you can protect yourself with some less burden that you may expect. So on the next slide, we will see that the most important attention should be given to the situation when you have in your relationship with Ukrainian counterparties, you have a transfer pricing adjustments, because together with some really payments that may be treated as dividends, like distributions which reduce an undistributed profit, or capital gain income may be treated as a dividends in Ukraine. The transfer pricing adjustments are really under high demand of our tax authorities, because these adjustments may be taxable in Ukraine at 15% standard rate of withholding tax. And this is a quite technical and important unstandard situation for Ukraine. On the next slide, you will see how this situation may be provided you as an example. If you are, for example, Germany, manufacture and supply goods, some equipment to Ukraine, you have your price at 500,000, and your Ukrainian counterparty distributes this equipment with a profit, and the operating profit will be, for example, in this transaction only 1,000. That means that net profitability is 0.4%. But the market range is higher, and it is between 2 and 7, and that means that you will have, for this particular year of your supply, for example, year 2024, you will have a transfer pricing adjustment which shall be taxable in Ukraine at not even 15%, because for the particular situations when you supply something and you do not expect for transfer pricing adjustment, and this information will appear only next year when you do your usual transfer pricing study, you cannot use the usual way to withhold tax, so to reduce the amount to be paid by 15%. For that situation, our tax code in Ukraine says that you have to apply gross up method. That means that even you will have the withholding tax higher, about 17%. Let's look at the next slide, what will be in this situation, the practical recommendations. So everything that relates to the constructive dividends taxation is a headache of your Ukrainian counterparty, which is responsible to make this transfer pricing calculation and calculate the adjustment and pay the tax to the budget before submission of the transfer pricing report. Usually it is in October, before the 1st October of the next year, after supply. And this withholding tax is part to the usual normal corporate income tax return. This is the special annex, which shows that on the income paid to non-resident according to the transfer pricing adjustment, the appropriate amount of withholding tax was paid, even if it is not withheld. It is calculated and paid from the funds of this Ukrainian counterparty. At that, you may expect that your Ukrainian counterparty will ask you to update the supply contract with appropriate provisions on how to manage this additional burden that your Ukrainian counterparty may take, and you may agree to compensate. But what is more important, because we have a double tax treaty between Ukraine and Germany, and this double tax treaty is not a bit usual and provides the relief on this payment. It says that if you have this transfer pricing adjustment, you will have to pay the tax, and if the double tax treaty is applicable, you may reduce it by 5% if this is supplied between parent and subsidiary company, and you may apply 10% in all other cases. But in order to apply this double tax treaty, there is an important document to be provided to your Ukrainian counterparty. This is tax residency certificate. So our recommendation is to review your supply contracts, whether you have this tax clause, how to manage the situation when there is a transfer adjustment, there is an amount paid by your Ukrainian counterparty, how to deal with this. And what is more maybe important to provide, to have this recommendation and request to provide with a tax residency certificate for German company for the year of supply and each next year, in order to save this additional tax to be paid in Ukraine at least by 5%, because the standard rate is 15, and you can reduce it, even if it is not a parent and subsidiary situation, by 10%. So very technical, but really simple, at least to reduce this burden. So that is my part. Be attentive. If you have questions, please ask, because for interest and, for example, and royalty payments, that may be different situation, not less beneficial, but I think that the foreign currency control is also a very important topic, and I give the floor to Victoria.
Thank you, Natasha. Hello, everybody. Great to have you all here today at our webcast. My name is Victoria. I'm a senior legal manager at Deloitte, and I am involved in requests of banking and finance nature, and work a lot recently with requests on foreign currency transfers and restrictions. Can you please switch the slide? So as you may be aware, from the beginning of invasion, our regulator, the National Bank of Ukraine, took a lot of important measures, which of course proved their effectiveness in due course. All those measures were directed to prevent our banking system, our financial system from falling down, preventing from the large outflows of currency from the country. So they were anti-crisis measures. Of course, in a due course, those measures were gradually amended or lifted and gave certain possibilities for businesses to continue working, to continue cooperation with their foreign counterparties, to continue making settlements. So those introduced restrictions were amended a lot of times. Here on this slide, we want to focus on those important amendments which took place in May this year, and they actually introduced a lot of new possibilities for business to perform foreign currency transfers. So it was allowed to perform payments for the import of all goods, works, and services which were being carried out after February 23rd, 2021. Well, from the very beginning of war, it was allowed to pay only for the import of goods, of critical import goods, yes? Later, in summer 2022, the restriction was lifted and it was allowed to pay for all goods. However, not for all services. And in May, the restriction was finally lifted out. So now all works and services are allowed to be paid for. Another important amendment is the possibility to repatriate dividends accrued based on the results of activities starting from January 2024. Here we cannot talk about this complete softening, yes, because we still have the limit of this repatriation, and it is 1 million euros per month. Banks follow, they analyze the utilization of this limit with the help of their e-limits system. But again, a new and important possibility for the new businesses to come to the Ukrainian market, to have the opportunity for funds repatriation. Another important thing was the possibility to transfer funds abroad under the leasing and rental agreements. There was an opportunity to pay lease and rental payments only for transport vehicles. And in May, it was this list was actually extended, yes, so meaning that it is possible to pay lease and rental payments for any equipment. We find it very important, this restriction softening, because we understand that a lot of equipment and machinery is needed to attract to our country for rebuilding purposes. So this will give a possibility to make the relevant payments. Another important restriction lifting is deals with repayment of loans. We have so-called new and old loans. So in terms of new loans, these are those loans received from June 12th, 2023. They can be repaid, but with a number of certain criterion and restrictions. It is not allowed to purchase a foreign currency to repay this new cross-border loans if the term of this loan is less than 1 year. So it is not allowed to service the short-term loans up to 1 year. Previously, it was the 3-year term. But if we talk about interest, servicing of interest under these new loans, it is allowed regardless of the term of the loan. In terms of old cross-border loans, these are those received before June 20th, 2023. It is allowed to repay interest on these loans, but following the number of criteria. So there is an interest for the period from 24th of February 2022. There is no overdue debt as of this date. And there is also a limit for interest repayment, 1 million euro per quarter. The funds which are being used for repayment, they cannot be obtained as a loan or credit funds, and there is no provision for early payment or restructuring of overdue payments. A few important amendments also relate to possibility to return loans granted by international financial institutions, possibility to transfer loans from Ukrainian legal entities to accounts of their own branches and representative offices. We understand that there's also important in terms of situations where businesses were relocated, where new branches and representative offices were opened abroad. So there is a possibility to make the relevant transfers. And the last amendment is on possibility for representative offices of international card payment systems and foreign airlines to purchase foreign currency for the benefit of transfer to their parent companies. There is also a monthly limit for such transfers. So in a nutshell, these are the most important amendments which took part in May, and they are called like the largest softening of currency restrictions from the beginning of war. The next slide, please. Within our work, we received requests of different nature, but we have gathered here the most common questions which we had on currency restrictions. Of course, a lot of requests were on the possibility to pay for certain services. That's where we needed to communicate with the servicing bank to find which type of services are on the list of allowed and help the clients with this communication. Having the restrictions for payments, of course, our clients turn to us with the request to review some options for such repayments, for such repayments, and we were analyzing the possibility for contractual set-offs when there were some mutual obligations. We analyzed the possibility to contribute the debts of Ukrainian companies to their share capital, debt to equity conversions. We had a number of requests on this topic. And of course, there are many requests on loans repayments and now recently on new dividends repayments. The next slide, please. So as you can see, we have, of course, our regulator elaborated certain colleagues. Sorry, that we have some technical issues, so we are back. Just to finalize my part, there is a strategy for introducing the gradual lifting of restrictions. We are on the stage 2. Yes, and a lot of actions have been taken for this. Of course, we're all waiting for the stage 3 to have the complete liberalization, which would mean possibility to repay all loans, to repatriate funds without any limitations, to make investments abroad, to provide loans to foreign companies. So this is all yet to come. And we try to stay optimistic about these amendments and continue helping our clients with the different issues which arise within the currency transfers abroad. Colleagues, thank you very much for your attention. Here at your disposal for any questions. Thank you very much. Passing the word to Vasil back.
So we talked a lot about the export potential of Ukraine, at least in my part. And in this aspect, I would like to introduce you the authorized economic operator regime in Ukraine. So it's a special customs regime, which is present in a lot of European countries, but starting from 2021, it was also introduced in Ukraine. Its widespread adoption was derailed by the war for some times, but starting from 2023, I would say it has begun in Ukraine at its full force. And as of now, a lot of Ukrainian most prominent exporters and importers have been granted this regime and are enjoying benefits. So basically, what's AEO in Ukraine? There is two types of AEO authorization. There is AEO-B and AEO-S, and they offer different benefits in terms of importing, exporting goods, simplifying customs procedures, making them more quicker, and in general enjoying more trust from the customs and suffering less customs audits, and being viewed as a transparent partner of Ukrainian customs. Next slide, please. So in terms of specific benefits, which Ukrainian companies that is involved in importation or export of goods from Ukraine may enjoy from this status is, first of all, a decrease in general warranty, which is a prepayment you need to make to Ukrainian customs in order to be able to import or export goods. You prepay certain part of duties beforehand. If you have this AO status, then you can either decrease the amount of prepayment or be fully exempt from it, which is a great benefit for the company's cash flow. Moreover, the company's importers, they can process the goods not at the customs, but at their own warehouse. So when they import goods, they can do custom clearance on their premises, which simplifies and vastly quickens the whole process, which is a great benefit for the companies which needs importation to be done quickly or which need the steady and regular supply of goods for their business activity. And finally, for exporters, they can also place the custom seals on their premises. They do not need to do it on the customs authorities' premises, which also simplifies and quickens the process. There is also a promise from Ukrainian customs to introduce a separate lines on the custom checkpoints, which would only be reserved for the vehicles and for the cargo, which is imported, exported by AO regime participants. This has not have been implemented yet in a full capacity, but we expect these special customs lines will be fully implemented in end of 2024 or early 2025. So, and again, I want to stress that receiving the status, it grants basically the company a lot less communication and complication when dealing with Ukrainian customs authorities, streamlining the whole import-export process. So in case these operations are material, we generally recommend our clients to at least look and consider getting this status. Also, Ukrainian customs code and customs regulation are flexible enough to offer the companies that do not meet all the criteria necessary to get this status to apply for specific simplifications. So in case the company just want to reduce warranty, it can apply only for warranty reduction and do not fill all the conditions, all the requirements to receive the full AO status, and just receive this warranty under simplified procedure. And this applies to other simplification as well. Next slide, please. So as Deloitte, we offer a wide range of support to our clients who wishes to obtain their status. First of all, we do an assessment whether the company meets the necessary criteria to obtain the whole status or just to obtain certain simplifications. We help the companies to audit their internal processes and documentation in order to ensure that the company meets all the standards required by this Ukrainian custom authorization. And we also help to fill the application questionnaire itself, which may sound simple, but in fact, it's a very large and comprehensive document, which requires description of all the accounting processes which are related to export-import, all the digital processes, so company software, IT security. It also requires description of controls in terms of import, export, and general customs functions of the company. So there is a lot to fill in and a lot of describe, and it needs to be described in a way that would satisfy Ukrainian customs authorities. So it's not the expertise that most of the Ukrainian companies have readily available in-house, and we are happy to share it, happy to share our experience and our knowledge in this respect. And then we also help the companies to go through the customs authorities audit, which the company need to pass to receive the simplification or the status. We provide the on-premises support, and we can communicate with the customs authorities on our clients' behalf, and also help to make this process less straining on the company's own internal functions and employees. And also we're happy to say that we already have a few clients that with our help successfully obtained this AEO status, and they are authorized economic operators who enjoy all the benefits that I listed before. Thank you for attention, and I strongly recommend considering this in case you have an entity in Ukraine that does import and export on a regular basis. Andrei, over to you.
Thank you so much. Hello, colleagues. My name is Andrei Zhurel. I'm Senior Manager in Deloitte's Kyiv Office Tax and Legal Department. So I will cover this SAF-T topic, which is quite hot in Ukraine right now. And let's jump right into it. So SAF-T stands for Standard Audit File for Tax, which is a new type of reporting that really takes off in Ukraine. It takes roots in OECD schema that was developed back in late 2000s, but was rather slow in adoption across different countries. And in Ukraine, it has multiple complexities, deviations from this schema, and Ukraine-specific fields. So as of today, SAF-T reporting can only be requested by the tax authorities during full-scope tax audit. However, there are proposals to gradually enroll this reporting to large taxpayers starting from the next year, and for all VAT payers starting from 2027. However, these proposals are subject to Parliament voting for the respective bill. On the right side of the slide, you can see the pentagram, which basically shows the scope of information that should be included to SAF-T report. It's indeed extensive, and it covers most of the areas of accounting. Also has some information from tax reporting, and also it includes information from logistical systems and much more. Also, what differentiates Ukrainian schema from SAF-T reports in other countries is this really heavy emphasis on source documents, which are basically the documents that confirm the transaction really took place. Typically, they are delivery notes and acts of service acceptance. And another part is this strong emphasis on VAT accounting elements. So SAF-T reporting in Ukraine requires companies to indicate the tax point to date for each supply transaction that they were engaged in. And basically, it's how we do business in Ukraine, and it is quite challenging from the technical perspective. Also, the sheer scope of information that should be disclosed in SAF-T report is makes it really challenging to handle within the ERP or other information systems deployed at the companies. And as the information must firstly be gathered, then it should be enriched and converted to SAF-T report in a single system. Let's move forward to the next slide, please. So we as Deloitte support clients starting from 2016. We already have over 500 clients using our solution, which is called TaxCube. You can see all the countries we are present in. It's Poland, Norway, Lithuania, Romania, Ukraine, Bulgaria, and also we are rolling out in Denmark starting from the next year. We offer end-to-end solution that combines an effort from local tax experts for each jurisdiction, and also a team of technical experts who basically developed the TaxCube to support our clients at every stage of preparing to SAF-T reporting, from initial data analysis all the way to generating SAF-T report. Let's move forward to the next slide. So here we would like to highlight some of the practical challenges in implementing SAF-T reporting in Ukraine that we already see with most of our clients. So the first one is a lack of minimum required data that is necessary to generate the SAF-T report. Basically, the companies typically tend to collect, to gather only the information that is really required for their own purposes, which is like basically the basic function of accounting, right? But SAF-T report requires to also include a number of information that typically isn't gathered by the company. And it makes preparation to this reporting really challenging because SAF-T report can only be generated on the already available data. And if the company doesn't have some data, then it's an issue that requires either gathering data or somehow populating it using some sort of an algorithm. The second challenge is the volatility of our legislation and the lack of specific guidelines from the tax authorities. So just this Monday, the tax authorities released a new version of SAF-T schema in Ukraine, and it introduced quite a lot of changes to the previous version. And the guidance on using this new schema is really limited, which makes preparation, the whole process of preparing to SAF-T reporting much more challenging. Another challenge is that we typically see is difficulties with extracting certain system-specific data from the company's ERP system or other information system. So some companies use systems that don't really offer this easy access to the data that they generate, such as like system date of the entries, posting date of the entries, some product codes, vendor codes. Most of the systems provide this information, but some don't. And the fourth challenge is to a certain extent linked to the first one. Basically, it's the need to change the existing processes at the level of the company in order to facilitate all this new exercise of gathering information, its storing, its enrichment, and conversion to SAF-T report. So these are like the most common challenges of implementing the tax cube in Ukraine, SAF-T reporting in Ukraine. And let's move forward to the next slide. Here we would also like to highlight our solution that we as Deloitte offer and its key advantages. So basically, as I mentioned earlier, we have developed the SAF-T reporting solution that is called TaxCube. It is non-intrusive software. It doesn't really integrate directly into the ERP systems or other information systems of the companies, which basically makes it really flexible because TaxCube can work basically with any report that is generated by any information system of the company as long as it is extracted in a structured way. The solution was developed with keeping regular accountants in mind. It doesn't require some IT-specific knowledge, some IT-specific skills. It has a very intuitive interface, and it is really user-friendly to use. Also, the tax authorities didn't really develop some template for presenting SAF-T report, but TaxCube offers also a functionality to present the information that is used for SAF-T generation purposes, both at the level of the schema and at the level of specific information that is uploaded by the company. Also, TaxCube can be deployed both at the company's servers and at Deloitte's servers. That basically depends on your preferences and some internal data confidentiality, data protection policies. So, for example, if the company doesn't want to provide any data to external vendors, then we can deploy TaxCube at the servers of the company, and the data doesn't leave the company at all. And also, I'd like to highlight that the solution is being developed on an ongoing basis. The number of countries that are joining TaxCube is constantly rising. And behind all this effort, we have the technical team who basically developed the solution and continues to develop it. They ensure that the solution stays up to date and it is supported. And also we have teams of local experts for each country that monitor the legislation on an ongoing basis to ensure that TaxCube remains fully compliant with all the local requirements. And let's move forward to the following slide. So due to time limitations, we cannot present the TaxCube and its functionality during this webinar, but we have already prepared webinar in English that has more details on SAF-T reporting, first of all, and also has a presentation of our solution. So you are very welcome to scan the QR code and see more information. Thank you, colleagues.
Andrei, there was one question. Would you do a very short, could you answer very shortly the question which is raised in the Q&A?
Sure, let me look into it. What is the first year of SAF-T reporting? Is it 2026 for 2025 or 2025 for 2024? So currently, the SAF-T can be only requested by the tax authorities. There is draft law which remains in the parliament. It's not voted yet. That suggests to launch the regular reporting starting from 2025. The wording of this draft law is not perfect, and it allows for its really aggressive treatment, which can be treated in the way that in 2025 the companies must submit report for 2024. However, the parliament has really limited time to adopt this law. Basically, they have only less than 2 months, actually. They can adopt this law by the end of December in order for it to start working from 2025. So there is some uncertainty in this regard, but this also may serve as additional push for the companies to start preparing for this reporting, because it will enroll sooner and later on a regular basis, and the whole process of preparing to it is really complex, extensive, and it takes a lot of time and effort.
Many thanks.
Great, colleagues. The next topic is the electronic document management. I see we've started the discussion, so it seems to be good. Let's move on with the next topic. My name is Roman Makarchuk. I'm a senior legal manager with Deloitte, and I have quite few simple messages for you about EDM. Let's talk a bit about the existing legal framework, about the practical implementation trends. First, I'd like to say that EDM in Ukraine is quite possible, and the legal basis for EDM in Ukraine was established in 2003. And it's quite interesting situation, because in practice, actual social relationships, business needs, most commonly arise before any laws are made to regulate them. But here we are facing a paradox when the law came well in advance of the actual business need. As for the state digitalization, the government has switched to use EDM in dealing with business in most areas. For example, and in particular in tax and customs affairs. Just to recap, the 2017 collapse caused by the beta virus uncovered that the law provided for no options for taxpayers to file certain types of reporting in hard copy, even under force majeure circumstances. And to solve this problem, separate legislation was adopted. At the same time, the court practice regarding the use of the latest legislative developments on EDM is still forming. We think that it may be caused by the moratorium to conduct tax audit during COVID times and partially during the full-scale war. Anyway, we can say that the majority of companies use EDM at least for some operations. The most common cases, apart from the electronic communication with the state, are electronic civil agreements. And on the separate note, I'd like to mention that despite the frequent blackouts, EDM systems have proven resilient, keeping business process moving, and companies in Ukraine just bought power generators and concluded additional agreement with internet operations and worked in those circumstances. On the next slide, let's look at some recent trends of EDM implementation in Ukraine. The full-scale Russian invasion has accelerated EDM adoption. Companies move more critical functions to digital formats, leveraged cloud storage to ensure data security and continuity. This transition also aligns with the increased usage of alternative accounting software, as many companies look to replace the widely used 1C software due to security reasons. Also, we've now seen initial cases of transferring long-term storage documents to EDM. These documents include employment-related documents. This step is crucial because these records often must be stored securely for many years, and digital storage can reduce risk associated with physical document handling. Some companies leave these documents in paper due to certain unclear provision of archiving legislation, but our team participated in a few first cases of respective transition and had positive experience of passing the tax audit with electronic labor documents. We got approvals from the archiving institutions for our clients on their EDM policies with transition of employment docs into electronic format. Also, Ukraine has started recognizing European qualified electronic signature, and this is a significant step because it opened doors for easier legally recognized digital interactions with EU partners. Pilot projects are also underway to gain recognition of Ukrainian QSs in the EU. Now let's move to the next slide and talk about some practical steps you can take on transition to EDM. First, just review your operations and documents to ensure that they can be transferred to EDM. Our experience shows that most documents can be converted to electronic format. However, such an analysis is important and can show which documents should be dealt with first, which document may require additional steps from counterparties or the company itself before signing them electronically, and some similar issues. After that, develop internal policies outlining the transition to EDM. Usually there are two main documents. The first is the EDM policy, where you can clearly regulate the processes of handling electronic documents and electronic signature, acceptance of documents, sending, determining dates, backing up EDM systems, archiving, handling during tax audit, etc., etc. And the second one is the accounting policy. At this stage, it is also advisable to draft amendments to existing documents to reflect their actual movement in electronic form. In some cases, changes to certain corporate documents of the company also may be required. Then choose the right EDM platform. You can evaluate platforms based on your business-specific needs, ensuring compatibility with your existing workflows, budget, interactions with other systems, analyzing your pool of counterparties, and so on and so forth. Some companies may even benefit from using multiple platforms for different aspects of their operations. And finally, implement your EDM system in phases. In closing, we believe that EDM is no longer a choice, but rather a necessity in Ukraine to doing business, to meet requirements of current business environment. And by embracing EDM, companies not only streamline their operations, but also make them more stable and sustainable. Thank you for your attention. That's all from me. And Mr. Wilmans, the floor is yours.
Roman, thank you very much. Yeah, before I'm moving to the next topic, I would like to make 2-3 general remarks. Yeah, first of all, also based on the topic running business in Ukraine and future of Ukraine. Yeah, I'm really impressed. Yeah, the level of infrastructure in Ukraine, which my colleague have presented today. Yeah, it looks like that Ukraine has a very modern taxable infrastructure in place, which is allowing the taxpayer to cooperate and to be coordinated also with tax authorities. Second remark I would like to make is also the digital infrastructure we are using today. I'm really also impressed, how excellent, the communication in the infrastructure is running today. That is, I think, also a fundamental basis, how we are running business in Ukraine. Last topic also to Sasha comments. I would like to stress, that there's a double tax treaty in place between Ukraine and Germany. I have had several discussions also with the competent authorities here in Germany. Also, both competent authorities are working. Also, in the case of a potential double taxation case, it's possible to file MAP procedure or APA procedures at the level of the so-called Bundeszentralen Versteuern. But also, in addition, it's possible also to speak on an informal basis with local tax authorities about investments and running business in Ukraine. Now, I would like to move to the next topic, German and EU investment program. I would like to start with specific initiatives. We are differentiating between investments and running business. Investments, both sides, German and the EU, are granting guarantees for these investments, but also in addition, I think there are guarantees and granting and funding programs which the European Union has already implemented. For running business, especially in the case of delivery of goods and services, I think there are so-called export credit guarantees which are implemented by the German government. In all the cases, the German Chamber of Commerce in Ukraine, but in Germany as well, is also giving more detailed information about all these programs. What you can see below is that in the numbers, and you can see that the state guarantees are increasing rapidly. That means in 2023, the cover volume of the export credit guarantees amounted to around 170 million euro. In 2024, the running business year, I think there are 46 investment guarantees for projects in Ukraine in place with a total coverage volume of 340 million. That means Ukraine is definitely on the agenda, and what we can see is rapidly increasing investment guarantees. Moving to the next slide. I think there are specific institutions in place. First of all, the so-called Deutsche Investition- und Entwicklungsgesellschaft. And here you can differentiate between granting of loans and also funding programs. I think there are several programs in place with really high volume. So the volume of loans are in the moment up to 5 million. The project funding up to 2 million euro. In addition, I think the European Bank for Reconstruction and Development in London is also has already implemented also loan and funding programs. I had a chance to visit the European Bank for Reconstruction and Development last June, and the board presented the running projects which are supported by the European Bank for Reconstruction and Development. And what I can tell you is that this bank, via local banks, are supporting very much local investments in Ukraine, especially in the case of damages and also sustainability topics, and green financing or green investments are a key topic of this bank. Last but not least, I would like to mention the so-called import promotion desk. It's only not a question of running business from outside in Ukraine. I think it's also of importance to reflect, how the Ukraine multinational companies can also be supported in exporting of goods and services. And in this respect, there's a so-called import promotion desk in place, where interested multinational companies can also meet local Ukraine multinational companies and to speak about experiences, how business can be organized. In a nutshell, what I can tell you is that many programs are in place, and I think the institutions I mentioned are supporting you. Also, my colleagues of Deloitte Consulting are very close to these programs. So if you need more detailed information, feel free to come back to us, and we will support you in providing more detailed information about all these programs. So that was, first of all, our presentation of today. If you have any question, feel free to articulate it in the chat function or the Q&A session. Or I don't know if it's possible to open the mic and also to raise question to me or to the other speakers.
Actually,
not,
we can add some comments from our side, what we see as practitioners in Ukraine and activities of foreign investors, what they are interested about, how they can feel about what is going on in Ukraine. And from my side, from international tech side, we definitely see that businesses are looking for investments to fintech and even real estate. And that is maybe sad to say, but the war is also the time for big opportunities. And if your business is looking for some maybe risky but interesting and even for your personal philanthropic interests, if you would like to support our country, that may be either practical or either philanthropic to make business in Ukraine. But what is more surprising for us as Ukrainians is that the country is working in its normal style because of people who are very adaptive to the situation. And you can find workforce, you can find money to build something and product something. And still, Ukraine is a very rich country by resources, by people, by even ability to build something in very short timeline. So for people who knows how Ukraine works, it's big time for opportunities, and we see that Ukrainian businesses are growing, as you may see, abroad, and they are very flexible to build up structures and have income hedging the risks, and it's very interesting experience for Ukraine. Colleagues, what about your clients, what you see about Ukraine, how they invest and how they are feeling about?
I would just like to add one point. We talked a lot about losses in the TP section, and then we also talked about dividends and repatriation of profits and the stability of the economy. So I want to stress that most of our clients did incur losses, but it was 2022 when the war broke out and the economy was on a hold for a couple of months, and then there was time needed to rebuild all the processes, to rebuild supply chains, and to adapt. However, after that, 2023 and the first half of 2024 is mostly profitable in those businesses, at least that I work with. So I wanted to clarify that.
I just want to support Natasha's statement about the attractive industry of fintechs in Ukraine. I'm talking from the perspective of regulatory framework. Indeed, we have a lot of new legislative acts in place, which already comprise the EU provisions. We have the open banking to be launched in August 2025. And right now, a lot of companies specialize in these issues, payment institutions, they address a lot of requests to us to actually explore this landscape and to get prepared for some fruitful business in future. Thank you.
And we are seeing a big interest, if we are talking about legal side, to act in the startup model. So if you do something in Ukraine, be ready to act as a startup model, not maybe even as a heavy organized structural business. So you have to be very proactive.
Now, I'm really impressed, yeah, how you are managing your situation, how the people are organizing their life, also how the government is building up an infrastructure which is very attractive for foreign investments. Really very impressive, and I think that was also the subject of our presentation of today, yeah, that the taxable infrastructure is working, or the taxable and legal infrastructure is working, is very modern, and also on a digital basis, it's possible to exchange information between taxpayer and tax authorities. Yeah, I would clearly say, yeah, the infrastructure is really existing, very modern, and is working really excellent. And that is, from my perspective, also a key message also to foreign investors who are running business in Ukraine and who are intending to make investments in Ukraine. Yeah, that the infrastructure is absolutely modern and working very well. So now we are coming to the end. I would like to say, first of all, many thanks to my Ukraine colleagues. I'm very impressed, yeah, how you're organizing yourself. Also, the digital infrastructure today with Zoom is working very well. Yeah, that means also communication between Ukraine and outside is existing and is running well. I would like to say many thanks also to my colleagues here in Germany from Ukraine who supported me in organizing this webcast. This is the second webcast we are running today. And our clear intention, and that is also a wish of my heart, is to give you on a regular basis updates and to do further webcasts together with my Ukrainian colleagues also in the future. Yeah, because it's our job, it's our responsibility to bring Ukraine in a better world. And from our perspective, we are supporting this very much. So thank you very much, yeah, for participating our webcast, and looking forward to being in touch with you also in the future.